Good day, class. So for today, let's continue our discussion on the topic Bangko Sentral ng Pilipinas and its monetary and fiscal policy. So again, let's have a little review. What is money? Money consists of bills and coins that are generally accepted as payment for goods and services. So here in the Philippines, our currency is called peso, Philippine peso. And the other country, they also have their own currency, and which is also the legal tender of their country. So before the concept of money begins, it started with the concept of barter system. So what is barter system? Barter system is the exchange of goods and services without the use of medium of exchange. And for barter system to exist, there must be two parties involved, which is we referred as buyer and seller. And the thing or in exchange not ilang gina trades is the goods or services. So in this barter system, there are limitations. First is double coincidence of ones. So as we explained above or earlier, for barter to exist between two parties, there should be reciprocal exchange of needs. So dapat ang duwa ka parties na dapat sila um exchange no na ginabuhat based on their needs. So a difficult task to find is that sometimes people have to resolve to look for another party to exchange their commodity that is desired by the other party who has their needs. So it's very difficult in barter system to find another party na the same ang inyuhang one. So that is why it is one of the limitation of the barter system. Second is the absence of common measure of value. So the presence of monetary system exemplifies the inefficiency of barter system. Having too difficult or having two different commodities how the two parties can determine the volume of exchange. With the money in place, a particular commodity will have value for exchange. So it's very difficult no, to measure the value of the goods and services being rendered in the barter system. There is no measurement that is being used no, to ensure that they have been equally trading the goods and services based on its actual value. Third is indivisibility of certain commodities. So a barter system does not materialize if one party to a transaction wants to acquire a certain amount of another commodity, but he has the payment of indivisible units that is worth more than what the other party wants to acquire. So it's very difficult, again, to measure the value of its goods and services that in being offered. And you cannot just divide a certain goods or services based on the value that being determined by the other party. So there is no characteristic of divisibility and the barter system. Fourth is making a payment on obligation. So with the absence of common standards, making payments of obligation is difficult to establish. How can how one party can settle the obligation if the desire of another party is different from the latter's commodity. Fifth is the complexity of storing wealth. So here, storing one's wealth is difficult, especially if the commodity involved has a limited life. So in monetary system, storing wealth is very simple. In barter system, it's very difficult to store your wealth because there are goods that are perishable and have timeline no, in terms of consumption. So you cannot really store your wealth in a barter system. Six, barter result in to slow down of trading. So parties in a transaction need to have what the other wants. So looking for a party that is satisfied both parties is difficult to find. Also with perishable goods, transporting goods from one place to another is also a problem considering the infrastructure at the time. So it's very difficult to trade in a barter and it's really slow down our trading because of course you need to find to another place another party who have the same needs. So it's actually making our economy slow. Not compared to the concept of money, no, it's actually making things easy. So there are three functions when we talk about the money. First, it is the medium of exchange. So here, money is used to facilitate the exchange of goods and services between two parties. Its acceptability among different economic units made the transaction easier. Second is the unit of account. So one of the failure of barter system is the absence of unit of account. Without this, an exchange between two parties become difficult. A unit of account is the standard numeric unit of measurement of the market value of goods and services. So here, money is a medium of exchange to transact businesses, making it easier. And an individual can make a payment by giving a set of coins or paper bills without thinking if such payment is short or overpayment. And next is the store of value. So here, it means that money can be reliably saved, stored, and retrieved and still used as a medium of exchange when it is needed. Money having the capacity of being saved and stored must maintain its value for relative period. So a store of value may also be in the form of real estate, precious stones, work of arts, and even collectible cards. So this is a mere essence of store of value that is served as risk management due to the stable demand of underlying asset. So again, there are three functions of money: medium of exchange, unit of account, and store of value. So let's go to the nature of money. So the nature of money actually characterized into three M's. First is the M1. So here in the M1, it is the demand deposit and currency in circulation, and it is also referred as the real money. Second is the M2, or it is the combination of M1 plus the time and saving deposit, which is also referred as near money or quasi money, and this is also known as the broad money here in the Philippines. And third is the M3. So M3 is the combination of the deposit substitute, which is also known as total liquidity. Now let's go to the characteristic of money. Characteristic of money actually follows the following characteristic. First is acceptability, durability, portability, divisibility, uniformity, malleability, and limited supply. So first, we have the acceptability. So here, everyone in economy must be able to exchange money for goods and services. People in the same country must be able to immediately recognize the money for acceptability. Second is the durability. Durability wherein the commodity uses money must last for a long period. So dapat magdugay ang kwarta. It must withstand normal wear and tear. And then it should also be in portability, which means that money use is easy to carry and is transportable from one place to another and transferable from one person to another. Fourth is divisibility. It means that money must be easily divided into smaller unit of value. So here in the Philippines currency has the following denomination. In terms of coins, we have 1 centavo, 5 centavo, 10 centavos, 25 centavos, 50 centavos, 1 peso, 5 peso, 10 peso, 20 pesos. And in terms of paper bills, we have 20 pesos, 50 pesos, 100 pesos, 200 pesos, 500 pesos, and 1,000 pesos. Next characteristic of money is uniformity. So here, it means that money used must have the same size, design, shapes, weight, and content so that it could be easily put in our pocket, no, if they are in uniform. Next is malleability. It means that coins can be melted down and shaped with different designs, while paper bills can be cut into any size and can be imprinted with design. And lastly, money should be in limited supply. So to maintain its value, money must have a limited supply. In addition to money and circulation must be restricted. It must also ensure that values remain relatively constant for the currency. So in addition, the source of coins and paper bills must be scarce and must contain control features. Again, we cannot really produce numerous supply of money because it will create hyperinflation wherein the value of our money actually decreases. So dili siya pwede ka mo decrease ang ato ang value sa money. And just like it also follows the yin and yang. There must be poor and there is rich. So dili ta pwede nakitang tanan puros dato because of course we need to balance the economy. Okay, let's proceed. There are frequently asked questions actually in regards to our currency. So first questions is, under what authority does the Bangko Central issue currency? So it is actually under Section 50 of the Republic Act or RA number 7653, or otherwise known as the New Central Bank Act as amended by RA 11211. It says stipulate that the BSP shall have the sole power and authority to issue currency within the territory of the Philippines. So it also issues legal tender, commemorative notes, and coins. So it's actually the BSP ang naa sila'y sole power in terms of the issuance of the currency here in the Philippines. Next is, how does the BSP determine the volume or value of notes and coins to be issued annually? So kinsa ba gyud determine no sa number of notes o coins na gina-issue nato? So here, the Monetary Board approves the volume or value of notes and coins to be issued annually. So upon recommendation of the Currency Management Committee or the CUMC. So the CUMC recommendation is based on the forecasting methodology approved by the Monetary Board, which is incorporates macroeconomic factor that determine demand for currency. So these include the movement of gross domestic product, inflation dynamics, and currency handling practices of banks. So we cannot just produce a lot of money. It is actually being monitored and being recommended by a certain committee that actually analyzes our GDP. If there is a need to produce or to increase the value of, or to increase the volume rather, of our notes and coins here in the Philippines. So again, that is the Currency Management Committee. Next is, how is currency issued to the public? So there are a lot of ways to actually issue the currency here in the Philippines. So it is being issued, the currency issued by BSP to the public through first universal bank, commercial bank, or specialized government agencies, thrift or rural bank with demand deposit account at the BSP. So it's not only the sole responsibility of the BSP, they also seek help from our different types of bank. Next, what is the volume or value of currency notes and coins in circulation? So, as of the end of June 2021, about 4.3 billion pieces of notes would have a value of 1.8 trillion, and 36 billion pieces of coins with a value of 49.7 billion are being in circulation. So, it's almost more than 2 trillions or 1.8 trillions ang in circulation ng mga notes and coins here in the Philippines. So that's probably already increases in value because we are already in year 2024. Next question, what does legal tender power of a currency mean? So when we say legal tender power, it actually means here that currency derived from explicit recognition by law on its use in the settlement of financial obligation within a specific jurisdiction. Pasabot ana, it actually recognized by law a certain instrument na ginagamit nimo sa isa ka country. So here in the Philippines, our legal tender is in the form of currency of the Philippine peso. Sa US, they have also the US dollar. Sa Japan, they also have yen rather, and in Korea, they also have won. So here in the Philippines, the BSP has the sole power and authority to issue currency. All notes and coins issued by BSP are fully guaranteed by the government of the Republic of the Philippines. This is pursuant to the Section 52 of the RA 7653 as amended by RA 11211. And in the case of coins, this is as per the BSP Circular number 537 series of 2006, which is just recently being amended, In this series, ang 1, 5, and 10 pesos shall be legal tender in amount not exceeding 1,000, while the 5, 1, 10, and 25 cents shall be legal tender in amount not exceeding 100 pesos. However, this is being amended no pursuant to the BSP circular number 1162 series of 2022 with a subject of legal tender limit of the Philippine coins for single transaction. This is being amended, no, amending the previous circular of 2006, which now the 1 cent, the 5 cent, the 10 cent, and 25 cent have a limit of 200 pesos. So, gikan sa 100, nahimo na ni siya 200. And the 1 peso, 5 peso, 10 peso, and 20 pesos, they have now a limit of 2,000 pesos. The legal tender limit for a single transaction of coins does not preclude transaction above the stated coin limit so long as both parties have prior and mutual agreement. So again, there is a amendment in regards to the circulations of the legal tender here in the Philippines for single transaction. This is approved by the Monetary Board Officer in Charge, Sir Eduardo C. Bober. So again, for the centavos, the limitation is 200 pesos. And for the pesos, 1 peso until 20 pesos, it have a limit of 2,000 pesos. So let's go for another question. What is demonetization of currency? So when we say demonetization, it is the process of removing the monetary value of the legal tender currency by issuing authority. So when a currency is demonetized, it shall no longer be accepted for payment of goods and services. And this is under the Section 57 of the New Central Bank Act as amended by RA number 11211 provides that the BSP may call in for replacement notes of any series of denomination which are more than 5 years old and coins that are more than 10 years old. So here, the new design series, which was issued in 1985 until 2015, was the most recent banknote series demonetized by the BSP and whose exchange period ended on December 29, 2017 per BSP circulation number 977 series of 2017. So demonetization is katong mawala na ang value sa imuhang legal tender currency na that is being issued by a certain country. So katong previously nato na experience in 2017 wherein there is already new design for money and the old design is being demonetized, meaning i-remove na nimo ang value. So once that it occurs, katong new design series, katong old design sa money, kung gamiton na nimo karon, wala na to siya value because it is being demonetized already. So before po mag-demonetize ang isa ka currency na design, mag-inform po na ang BSP that the certain period that hilang i-accept ni na certain design and kung mulapas na siya, wala na siya value, di na siya madawat for financial transaction. So why did the BSP enhance the design of new generation currency banknotes? Nga no gi-enhance man ang design sa atong bills. So the recent enhancement of the new generation currency banknotes was intended to incorporate latest available for anti-counterfeiting technology and improve the visual and tactile differentiation of each denomination. So the design and security features of banknotes and coins are regularly assessed by the central banks to protect currency integrity. So always na gina-review sa BSP ang design. So the design no recently being issued for 1,000 is a manifestation that they always adapt changes. No katong bag-o na design sa tong 1,000. Next, what are the reason for the conversion of 20 peso banknotes into coins? So previously, sa previous design, the 20 pesos is only a bill. However, on its new design, nag-recreate nila, they already make a 20 peso nga coin. Ngano kaya? So here, the reason is that the 20 peso banknote being the most circulated denomination among the banknotes changes hands more often. So always nato ginagamit ang 20 pesos. Thus, it is more prone to wear and tear and needs to be replaced more often. Kay tungod no, always na to siya ginagamit probably sa pliti, pagpalit sa mga pamalito no, sa mga chichirya, mas dali siya na magisi ug always na to siya gina-replacean. So these findings were confirmed by a study conducted by the University of the Philippines. The issuance of coin in law of a banknote as recommended by Committee on Currency Design and Enhancement CCDA is more cost efficient in the long run since coins last longer than the banknotes. And because of that reason, na dali ra ka siya magisi, always nato ginagamit, it is more convenient if it is in coins. Kay ang coin, dugay man, last long man siya, dili man siya dali-dali magisi or matupi, no? It actually in terms of life niya, no, shelf life, mas mo long run ang coin. So that is why they opted to adopt a 20 peso nga coin. However, the bill still exists in circulation. Next question, how does the BSP preserve and maintain the integrity of the currency? So here, the BSP undertakes a regular review of the design and security features of the Philippine currency. It implements policies and programs such as clean notes and coin policy and coin recirculation rather, program aim at preserving the integrity of the currency. So it also conduct anti-counterfeiting operations pertaining to the currency counterfeiting or any criminal activities that undermine the integrity of the currency. So public informations campaign are regularly organized to educate the public on the design, security features, proper handling of Philippine currency, and relevant laws, policies, and programs. And there is a certain week wherein the BSP actually conduct a certain seminars to the public in terms of the regulations in the BSP. Okay, next. What is the restriction of the currency import or export of the Philippine peso notes and coins? So a person may import or export, meaning they could bring in or take out outside of the country or electronically transfer legal tender Philippine notes and coins, checks, money orders, or the bills of exchange in the amount not exceeding 50,000 pesos. So pwede sila magdala sa Amerika o kwarta na dili mo exceed of 50,000. However, if they want to bring money more than 50,000, they could have actually authorization. Prior authorization from the BSP's International Operations Department is required when the export or import of Philippine currency exceeds this amount. And if you are bringing or sending money, there is also another committee or that regulates such transaction. So that already covers under the law of AMLA or AMLA. So now let's have our discussion to the Bangko Sentral ng Pilipinas. So kinsa man yun ni si Bangko Sentral ng Pilipinas? So Bangko Sentral ng Pilipinas is the country's central monetary authority, is an independent corporate entity and serve as guardian of price and banking stability and plays an important role in the lives of Filipinos and economy. So according to Rocco in 2004, it cites BSP as freedom from dictates of foreign and local interests or even from the state of the government, particularly from the executives. So BSP is considered as autonomous in regards to its monetary policy. So dili siya ga-rely kung unsay ginamandates ato ang national government or Senate. They could actually create their own monetary policies. So here, the vision of the BSP is that it aims to be a world-class monetary authority and a catalyst for global competitive economy and financial system that delivers a high quality of life for all Filipinos. And its mission is that BSP is committed to promoting and maintaining price stability and providing proactive leadership in bringing about a strong financial system conducive for a balanced and sustainable growth of the economy. So, toward this end, it shall conduct sound monetary policy and effective supervision over financial institution under its jurisdiction. So, there are responsibilities of the BSP. First, responsibilities of the BSP is that it actually mandates in regards to the liquidity management. So here in liquidity management, the BSP formulates and implements monetary policy aimed at influencing money supply consistent with its primary objective to maintain price stability. So they will always make sure that they could be able to formulate and implement monetary policy to ensure a liquidity level in the market or the financial market. Second is currency issue. So here the BSP has a exclusive power to issue the national currency. All notes and coins issued by the BSP are fully guaranteed by the government and are considered legal tender for all private and public debt. So they always ensure na ang value sa atong peso is always reasonable or always at at its strongest currency level. Next is the lender of last resort. So here, the BSP extend discount, loans, and advances to banking institution for liquidity purposes. So we have mentioned in our previous topic that there are tendency that a certain banks closes, wherein they could actually the depositor go to the PDIC to claim their insured deposit. So here, and that's instances that a certain bank actually closes and makita na there is actually still chances of good operations in the succeeding months, no, they could actually lend money to those banks and they act as lender of last resort. So sila always ang go-to nga bank, no, in case na magka financial struggle ang certain bank. Next is it also responsible for financial supervision. The BSP supervises banks and exercise regulatory powers over non-bank institutions performing quasi-banking function. They always make sure that the bank's regulations are healthy in the economy. Next is management for foreign currency reserves. So the BSP seeks to maintain sufficient international reserves to meet any foreseeable net demand for foreign currency to preserve the financial stability and convertibility of the Philippine peso. Six is determination of exchange rate policy. So here, the BSP determines the exchange rate policy of the Philippines. So currently, the BSP adheres to a market-oriented foreign exchange rate policy to ensure orderly conditions in the market. And lastly, there are also other activities that they are mandated. So the BSP function as the banker, financial advisor, and official depository of the government, its political subdivision and instrumentalities and government-owned and controlled corporation. So they also act as a financial advisor to the banks as they also give monetary policy to its stakeholders. So we have also discussed that um, in the MIC, in the creation of the Maharlika Investment Corporation, BSP is also one of the board of director, wherein they actually give advices to the board what are the policies that they could implement now in regards to our investment. So what are the rules of the BSP? So the BSP has many rules to fulfill its duties and responsibilities. So there are several rules. First is it acts as a supplier of money. So in regards to supplier of money, first, it issues Philippine currency, the peso, which could be in paper notes and coins, used in economic transaction and is fully guaranteed by the Philippine government. And also, it is printing paper notes and minting coins to replace old ones or add to those currently being used. So that is as a supplier of money. BSP also acts as a money manager by ensuring that there is enough money to meet the financial needs of the country. So having too much money in circulation will result in inflation, which increases the prices. And the BSP as a monetary manager shall perform the following. First is required banks to keep a certain portion of their deposit as reserves. So a certain bank cannot really lend all of their money. So dapat na sila yung reserves. So that is being regulated by BSP. Second is buy and sell of the government securities. They could actually become a money manager by ensuring that there are enough government securities. Third is extend credit to bank. So just like I said, there are instances na magkulang o kwarta ang mga bangko. So they could also lend banks. However, only to those bank that pwede pa nila masalbar. So dito sila maka-extend sa ilahang mga credit. The third rule of the BSP is the supervisor of all banks. So here, they could act as supervisor of all banks by regularly monitoring and examining the operations of bank as well as their compliance with banking rules and regulations. So again, here in the Philippines, non-banks and financial banks actually being regulated by the BSP. They always ensure that those institution here in the Philippines that deals with money is following the rules and regulation that have been set by the BSP. Second, assigning a conservator to temporarily manage operations of a financially troubled bank until it gets back to its feet. However, if the evaluation shows that the bank cannot be restored to a healthy condition, the BSP stops the bank operations to prevent it from incurring losses and affecting other banks and the public. The next rules is the banks of banks. So BSP act as the bank of banks. Since the BSP does not deal with public, it can only accept deposit from and grant loans to banks. So for commercial, production, and similar purposes, such as export and agricultural activities. And also as a lender of last resort, provides advances to bank in time of emergencies or financial problems directly threaten monetary and financial stability. And lastly, it also act as the main bank of the government. So here, the BSP act as the official depository of the government. So some of the tax collections, proceeds of the sales of the government securities and foreign loans, and withdrawals to repay foreign debt or pay expenses is being coordinated with the BSP. So coordinating the timing of the government deposits and withdrawals would contribute to the BSP's overall management of the money supply. So that are the rules of the BSP here in the Philippines. Now let's go to the governance of the bank. So the monetary board exercises the power and function of the BSP, such as the conduct of monetary policy and supervision of the financial system. Its chairman is the BSP governor with 5 full-time members from the private sector and 1 member from the cabinet. So there are a total of 7 members of the monetary board. The governor is the chief executive officer of the BSP and is required to direct and supervise the operations and internal administration of the BSP. A deputy governor heads each of the BSP's operating sector as follows. So we have here 3 BSPs operating sector. First is the monetary stability sectors, which take charge of the formulation and implementation of the BSP monetary policy, including serving the banking needs of all banks through accepting deposits, servicing withdrawals, and extending credit through rediscounting policies. Next is the supervision of examination sector, which enforces and monitors compliance with the banking laws to promote a sound and healthy banking system. And lastly, the resource management sectors, which serve the human, financial, and physical resources need of the BSP. So let's go to the monetary board of the BSP. So the power and function of BSP are exercised but by its monetary board, which has 7 members appointed by the President of the Philippines. So the new Central Bank Act establishes certain qualification for the members of monetary board and also prohibits member from holding certain position with other governmental agencies and private institutions that may give rise to conflict of interest. So here, except of the members of the cabinet, the governor, and the other members of the monetary board serve terms of 6 years and may also be removed for cause. And this monetary board meets at least once a week, and the board may be called to a meeting by the governor of the BSP or by 2 members of the board. So they usually meet every Thursday, but on occasion it convenes to discuss urgent issues. So these are the monetary board members of the BSP. We have just recently being appointed Ralph Recto. We also have Benjamin A. Jokno, Bros J. Tolentino, Anita Linda R. Aquino, Romeo L. Bernardo, and Rosalia V. De Leon. And we also have the chairman of the monetary board in governor, which is Eli M. Rimolona Jr. And we also have the different deputy directors of the different sector and also the senior assistant governor. So all of this information could be accessed on the website of the BSP. So what are the functions of the monetary board? So the first function of the monetary board is actually to issue rules and regulation it considered necessary for effective discharge of the responsibilities and exercise of power vested in it. It is also responsible for directing the management, operation, and administration of the BSP through organizing its personnel and issue such rules and regulation as it may deem necessary or desirable for this purpose. Third, it established a human resource management system that governs the selection, hiring, appointment, transfer, promotion, or dismissal of all personnel. Fourth, it's adopt an annual budget for and authorize such expenditures by Bangko Sentral as are in the interest of effective administration and operations of Bangko Sentral by applicable laws and regulation. And lastly, indemnify its members and other officials of the BSP, including personnel of the department, performing supervision and examination function against all costs and expenses reasonably incurred by such person in connection with any civil or criminal action, suit or proceeding to which any of them may be made a party because of performance of his function or duties, unless such member or other financial are found to be liable for negligence or misconduct. So that is the responsibilities of the monetary board or the function of the monetary board. Now let's go to another topic that we are to discuss, which is the monetary policy. So monetary policy can be defined as the management of the expansion and construction of the volume of money and circulation for explicit purpose of attaining a specific objective. So for example, in the case of full employment. So here, the instrument of monetary policy includes open market operation, reserves requirement, and discount rates. So on January 24 of 2000, monetary board approved in principle the shift of inflation targeting as a framework for conducting monetary policy. So when we talk about inflation targeting, it actually focuses mainly on achieving price stability as the ultimate objective of the monetary policy. So we have here the process flow of the inflation targeting. So so here we have the inflation targeting process flow. So the inflation targeting actually start with the government sets inflation target. So here it is the responsibility of the BSP to set inflation target. What once the inflation target have been set, it is then been announced to the public how much is the inflation rate that being targeting. So that undergoes assessment of the monetary condition and also forecast inflation conducts also monetary policy. So it could be then determine whether the inflation target in line with the target. So here, if it does not in line with the target, it goes to adjustment of the policy of the interest rate, and also the government rethinks of the inflation target. And also it issue open letter nga no stating nga no wala na meet ang ato ang target sa inflation rate. However, if it is in line with the target, it is then to publish a highlight of the monetary board meeting on the monetary policy discussions, also publish inflation target and a POB report. So all of these reports are available on their website. Monetary policy framework. So there are two strongest limitation of the monetary policy. First is it cannot peg interest rate for more than very limited periods. Second, it cannot peg the rate of the unemployment for more than very limited periods. And also, it have a advantages of monetary policy which can be changed quickly. And in terms of that, it has also effective in expanding on contracting the economy. It is also a tool preferred by most economies in short-run stabilization. Now let's proceed to the government agencies involved in monetary policy. So here, the BSP may implement monetary policy using the various instrument and can do any of the combination of the following actions. So first, we have here the open market operations. Here in the open market operations, the buying and selling of government bonds by BSP in the open market. So if the central bank were to buy bonds, the effect would be to expand the and hence lower the interest rates. So the opposite is true if bonds are sold. This is the most widely used instrument in the day-to-day control of the money supply due to its ease of use and relatively smooth interactions it has with the economy as a whole. So here in the open market, ang role sa ato ang government, they're just going to buy and sell of the bonds and also other financial instruments so that they could actually control the expansion of the money supply in the economy. The second monetary policy we have is the reserves requirement. So just like I said, the banks are mandated to maintain reserves through the central bank or the BSP. So here, the BSP or the Central Bank of the Philippines have actually control in regards to the reserves requirement. Reserves requirement are the percentage of commercial banks and other depository institutions demand deposit liability such as checking account that must be kept on demand at the central bank as a requirement of banking regulation. Though seldom used, this percentage may be changed by the central bank at any time, thereby affecting the money supply and credit conditions. If the reserve requirements percentage is increased, this would reduce the money supply by requiring a larger percentage of the banks and depository institution to demand deposit to be held by central bank, thus taking them out of supply. So as a result, an increase in reserves would increase interest rate as less currency is available to borrowers. So this type of action is only performed occasionally as it affects the money supply in a major way. Altering reserve requirement is not merely a short-term corrective measures but long-term shift in the money supply. So it is also one of the way for the central bank to actually control the money supply here in our economy through the reserves requirement. So they could increase it or decrease it depending on the status of our economy. And lastly, it could also be through discount rate policy. So discount rate is the interest rate at which the BSP borrows from banks to maintain price stability. So it is where commercial banks and other depository institutions can borrow reserve from the central bank at a discount rate. So this rate is usually set below short-term market rates or through T-bills, and this enables the institution to vary credit conditions such as the amount of money they have to loan out, thereby affecting the money supply. So if it is to note that discount window is the only instrument the central bank do not have the total control. So, so here, no, other than the open market operations and reserve requirement, the BSP also have hold in regards to the discount rate being offered to the banks so that whenever they need money, pwede sila maghulamdad to. And it is called discount rate. So that are the three monetary policy that the BSP could implement in regards to the involvement of monetary policy. Next, we have the fiscal policy. So fiscal policy is the use of the budget of the government to achieve full employment, control inflation, and stimulate economic growth. It can be used to overcome recession and control inflation, and fiscal policy may be defined as a deliberate change in government revenue and expenditures to influence the level of national output and prices. So basically, the rule of the fiscal policy is being monitored by the government itself for our economic growth. So there are two types of fiscal policy. We have expansionary fiscal policy. So when we say expansionary fiscal policy, it refers to the increase in government spending or decreases in taxes or both, so that the net effect of the aggregate demand is an increase in the government spending. So it is most likely used during recession or trough phase. When we say contractionary fiscal policy, it is the opposite. An increase in taxes or decrease in the government spending are both, so that the net effect of aggregate demand is a decrease in net government spending. It is mostly likely employed near the peak of the business cycle as the economic reaches full employment, GDP, and the potential for inflation accelerates. So again, there are two types of fiscal policy. Expansionary, mo expand ang ato ang fiscal policy. Contractionary, ang goal niya is to contract, no, to decrease the spending capacity of the economy. So here, another types of fiscal policy. A fiscal policy could be discretionary fiscal policy or non-discretionary fiscal policy. When we say discretionary fiscal policy, it is the deliberate manipulation of taxes and government spending by the government to alter rate, real domestic output, and employment, control inflation, and stimulate economic growth during a particular period. When we say non-discretionary, it is the change in the government expenditure or taxes which occurs automatically as a result of existing law. So kung moingon kag discretionary, there is a discretion of the government in regards to the manipulation of taxes. When we say non-discretionary, the changes occurs in terms of taxes is because of a certain enactment of a certain law. So it is automatically occur. So here also in discretionary and non-discretionary fiscal, there are two ways that the government can finance a deficit and explain which would have a more expansionary effect. So first here, the government can borrow money from private sectors, in which case it will be competing with private business borrowers of for funds. So, ang government, manghulam sila og kwarta sa private para na siya competition. There is healthy competition in the government. So, they could actually have um, a good competition in terms of financing sa tong economy. Second is the government can also finance a deficit by issuing new money, which is essentially means that the Federal Reserve has financed the deficit. So this type of financing would be more expansionary than borrowing from the private sector. So pwede pod no mag-issue ang atong government o bagong kwarta so that they could be able to finance kung unsay kulang sa economy. So that is more on expansionary, ga-expand na atong economy because we are increasing the money supply of the market. And another, there are two ways that the government could retire debt in the event of budget surplus and explain which would have the most contractionary impact. So first is that the government could use a budget surplus to pay off existing debt, which would recycle funds back into the economy and potentially offset the decline in the government spending. Alternatively, the government could impound the surplus funds or allow them to stand idle, which means these funds are not yet injected into the economy and would have a more contractionary effect than the first alternative. So pwede nila bayaran no ang existing debt gamit ang atong budget surplus, pwede po dili nila bayaran so that there will be decrease no in terms and more on contractionary ang iyang effects sa economy. There are two ways to retire debt. So let's now go on to the factors affecting fiscal policy. So that may affect our creation or implementation of the fiscal policy. First is the effect of a budget surplus. So a budget surplus means the government has resources to spend on infrastructure creation and its welfare plans without having the need to borrow or borrow less. Another factor is economic recession. So there will be cases that a recession may occur in a certain country. Recession means there is a great unemployment rate in a certain country. So a recession is a significant, widespread, and prolonged downturn in economic activity. So it also create impact to our fiscal policy. Next is built-in stabilizer. Built-in stabilizers are changes in tax revenues and government spending which occurs automatically during different phases of the business cycle. So here in the Philippines, we have our train law. It have been able to evolve to different laws no ga-increase ang atong mga rates depending on the transaction or nature of the business. So that is one factors in our fiscal policy. Next is progressive tax. A progressive tax is a tax that progresses to higher tax rate as taxable income increases, which is very visible here in our Philippines tax laws. Also, fifth is the full employment budget. So it refers to the budget deficit or surplus that would result with existing tax and spending program if the economy were operating at full employment. Six, political environment. So the spending taxation decisions of the government are made in a political environment in which the majority must be satisfied or satisfied enough to continue to vote for its elected representative. So we all know that the role of our Senate is actually to create laws, and it is one of the factor in regards to our decisions in the government, the spending taxation decision. So that is why we need to vote the good people in our Senate because they are the one who are mandated to create laws, not only in economic aspect but also in taxation, in regards to tax. And lastly, the effect of net export. So the export also have effect in our fiscal policy. When we say net export, it is the difference between a country's value of import and its value of export. Let's proceed to the discretionary fiscal policy and approach to economic problems. So, discretionary fiscal policy does not offer government policymakers potential tools, like such as changing taxes or government spending, to use for stimulating the economy during a recession or for contracting the economy during a period of high inflation. Fiscal policy, however, is not without its problems, criticisms, or complications. So some of them are the following. So first, we have the timing problem. There are three lags that identify under the timing problem category. There is a lag that is recognizing the phase of the business cycle. There is a administrative lag and deciding which policies to follow. And there is a operation lag in terms of the impact of policy once it is implemented. Again, there is lag in recognizing, administrative lag, and also operational lag. So timing lags limit the speed with which fiscal policy can be enacted effectively. So And also, there are political consideration in adoption of fiscal policy. So here, there are some pieces of evidence of political business cycle where particular expansionary policies are followed in election, whether or not economic conditions merit them. And third, we also have there is unexpected complication. So if the business and household expect that the fiscal policy will be reversed in the future, they may not change their behavior in the way that would expected in the fiscal policy was permanent. The taxing and spending decision of the state and local government may counteract or reduce the effectiveness of the fiscal policy decision at the federal level. So the government may enact an expansionary fiscal policy by increasing its budget deficit, but state and local government often have to balance a budget and economic condition may force them to adopt a contractionary policy that partially offset what the government is seeking to achieve. And also lastly, here in regards to this, we also have complication to domestic fiscal policy from national economy's connection to the world economy. So here, the economic shock from the abroad can affect the nation's import and export, and the net export effect can reduce the intended effect of fiscal policy. Now let's go to the fiscal monetary mix or the policy mix. So when we talk about policy mix or the fiscal monetary mix, it refers to the relative strength of fiscal and monetary policy and its effect on different component of output. So monetary and fiscal policy can be used to affect not only the level of the GNP or the gross national product, but also the composition of the GNP. So here, by borrowing the mix of taxes, government spending, and monetary policy, the government can change the fraction of the GNP devoted to business investment, consumption, net export, and government purchases of goods and services. So, where a monetary policy is left off, the fiscal policy takes off to influence income and consumption and lead the economy towards growth and development. That is the policy mix. Now let's have a comparison of the fiscal policy and monetary policy. When we say fiscal policy, it is the change in the government spending and tax rates that is being set by the government. So there is no specific target as long as it will benefit the economy or the government. So the side effect on government could be budget or borrowing, and it have a strong political dimension to changes of tax rate because again it is being set by the government, so they have a political interventions in the fiscal policy. When monetary policy, it is the change in interest rate or money supply, which is being set by the central bank, and this is being coordinated for target inflation and side effect on exchange rate and housing market. And lastly, mostly independent from the political prices. Therefore, when we talk about the policy being created by our government, that is fiscal policy. And the policy that is being created by the central bank, that is monetary policy. So that is the difference between fiscal policy and monetary policy. So I think this is the last slide of our discussion. And please comment in this announcement if you have able to view this recorded discussion. Comment your name and the date that you have able to view this recorded discussion.